Hello trader, I know you've been wondering how candlesticks form, and probably you've been searching on YouTube, on Google, how candlestick patterns or candlesticks generally form. As a beginner trader, most of the traders struggle to know how candlesticks form, why they form the way they form, why are candles forming bullish candles and bearish candles. In this full course video that I am posting here free of charge for you guys, you are going to learn everything that you need to know about candlesticks and candlestick patterns, and also how you can take advantage of this to get trade setups using the one candlestick strategy and other strategies that you've learned on this channel. If that sounds good and you're new to the channel, please leave a like on the video, subscribe to the channel, and guys, let's go on to the course now. Welcome guys to the candlestick science and in-depth study. In this full course, you are going to learn how candlesticks form and how you can be able to read them correctly to be able to incorporate them into your trading to find better entries and also enhance the accuracy of your timing for your entries. This knowledge can be especially very helpful when you're using the one candlestick strategy that I've showed you guys in another full course that I'll leave at the end of this video if you've not yet watched it. And also, if you are somebody who is promptly following the one candlestick strategy, you will find this very helpful, because in this study we are going to look at the formation of these candles and how their internal structure forms and affects the movement of the next candles that proceed from the current one. So yeah guys, let's get started. So candlestick science and in-depth study, we are going to be looking at bullish candles and bearish candles in their numerous variations. We will look at the most common ones and some few uncommon candlestick formations. So candlestick science. So what is a candlestick and how are they formed? A candlestick is a graphical representation of the price action between buyers and sellers in the financial market. This is represented by the open, close, high and low price of a given tradable asset within a specified time. Every candlestick has an opening price, it has the closing price, it has the highest price that candle has gone to, and it also has the lowest price that that candle has gone to. I'll show you guys that in a bit. So when studying a candlestick, we look at its formation from the time when the market opened, what happened during the trading session up to its closing time for a given period of time or time frame. For example, you can look at a candlestick on a monthly chart. From the time the month opens, you look at how it forms within the month, and then look at what highest price it achieved and what lowest price it achieved and what price it closes at. You can also do that on a weekly chart, on a daily chart, 4-hour chart, 1 hour, up to even a 1-minute chart. You can look at this from all time frames depending on which candlestick you are analyzing specifically. For example, if you're analyzing the daily candle, you're going to be looking at it on the daily chart. If you're analyzing 4-hour candle, you're going to be looking at it on a 4-hour chart. In the world of financial trading, we trade certain time frames and specific pricing levels at a specific time. So candlestick formation, though similar across all time frames, like the daily, weekly, hourly time frames, have different volumes, as the higher time frames hold candles with more trading volume than the lower time frame candles. Because for example, a daily candle takes a full 24 hours to form completely, meaning it takes a trading volume of 24 1-hour candles volumes to form one daily candle's volume. So the size in volume or pip range of a candle depends on the time frame in which the candle formed. What this means is that if you are looking at a daily candle, you have to understand that a daily candle holds more weight or holds more volume in the market than a 4-hour chart. It means that when you are looking at a daily candle, you are looking at the volume of 24 1-hour candles, and you're looking at a volume of about 6 4-hour candles. So whenever you are trading or looking at a candlestick, studying its formation and all that, you must consider that the higher the time frame candle you are analyzing, the more its importance based on its volume and the concept that I train or teach called market gravity. A bigger candle will have more gravity in the market. The market will most likely move towards the direction of the higher time frame candle as compared to the lower time frame candle. So keep that in mind as we go. The other factor that determines the formation and volume or size of a candlestick is the participation of traders at a given price and time. For example, during fundamental news events like United States non-farm payrolls, there is usually a very high participation of traders who want to take advantage of the volatility of the market at that time and the price to make quick profit. This also attracts bigger players who look at the fundamentals to determine how best to position or readjust their portfolios. So in light of this, most of the candlesticks formed during these fundamental news events have big candle bodies or ranges owing to the traded volume. We will look at different candles, why and how they formed. This will help us later as we look at how we can use this understanding to develop or improve on trading strategies that we implement in the financial markets. The candlesticks that form, be it on a 1 minute chart, 2 minute, 3 minute chart, sometimes their volume or their size is affected by the fundamental news releases or news events like NFP, CPI, PMI, and other fundamental news events that may occur during the trading session or trading period on a given time frame that you are looking at. So you might find the 4-hour candle during the NFP news having a very large volume, unusual large volume compared to the previous 4-hour where there were no news. Okay, so you have to keep that in mind as you are trading. Here on the screen I have illustrated the most common candlesticks that you'll find in the market. You have the first one as the most common bullish candle with a large bullish body, then the next one with a bearish large body, and then we have a bullish marubozu, we have a bearish marubozu, and then we have a spinning top, okay, which is bullish, spinning top which is bearish. We have a hammer, and then we have a hanging man, we have an inverted hammer, we have a shooting star, we have a bullish doji, bearish doji, dragonfly doji, tombstone doji, and long-legged doji. These are the most common candlesticks you'll find in the market. Before we go forward, guys, if you're finding any value, you're finding any knowledge in this session, in this trading course, please leave a like on the video, subscribe to the channel if you're not subscribed, and also share your comments down below. Ask your questions where necessary, guys. So we are going to be looking at common candles, internal structure formations here. We are going to look at the large bullish body candle. So a bullish candle has its open at the bottom here, it has its low, it has its close at the top, and then it has its high. Okay, so inside of this bullish candle, let's assume that this is a daily candle here. What happens is that the market will usually open and follow this path that I have drawn here as an illustration. The market will open and then go down and create a low, which usually creates this wick right here, and then it grows to the top to create the high, and then it closes. Okay, so this is for the bullish candle with a large body. So this daily candle right here can have this kind of internal structure here, which can be the 1-hour candles can form this kind of structure. The market can open, create this kind of movement right here with the candles inside of this bullish daily candle, which can be the 1-hour candles here or 30 minutes candles. They can form this kind of structure right here. So you should keep in mind that when you're looking at a daily candle like this, it has internal structure which is created by the price action between buyers and sellers. So inside of this candle right here, it's not only buyers who are in charge here. Okay, sometimes buyers are in charge, sometimes sellers are in charge, sometimes buyers are in charge, sometimes sellers are in charge. Buyers and sellers are in a tug of war to create this candle right here. They keep on pulling left, right, until one side overcomes the other. Now, how does that happen? That happens when there are more buyers than sellers. As you can see illustrated here, you have some bullish candles, some few bearish candles, but the majority of the volume, as you can see, the bigger candles are bullish, as you can see here in the illustration. So there are more bullish candles inside of this candle here than bearish candles. So it means that this candle will close as a bullish candle because the majority inside of it are bullish or buyers. This is the internal illustration of this candle here. I've made this illustration to make it very simple for even a beginner to understand the internal action between buyers and sellers. So as you can see here, we have the same candle here, but illustrated here with the red representing sellers, the green representing buyers, and the purple representing traders who are changing sides. Inside of the market, there are some traders who keep on switching from buying to selling and from selling to buying. Okay, so these traders have represented them in purple. So we will look at how that happens right now. So this candle, when it opens at the bottom right here, you guys can see where the open is. This candle goes down to create the wick. As it is going down to create the wick, these three smiling faces here are the sellers who sold the market down to create this wick. But when they sold it down to create this wick, the buyers came back in the market. As you can see, the equal buyers came into the market. As you can see, these smiley faces, they came back in the market and pushed the price against these three sellers. And then some of the sellers switched from selling to buying. That's why I've put these two purple faces here. So inside of this wick, we have sellers and we have buyers, and we have traders who switched from buying to selling and from selling to buying. Okay, so inside of this candle here, you'll find that there are traders inside of here who are constantly switching from buying to selling and from selling to buying. These are represented by the purple faces here. And you will see that the majority of the traders inside here are green smiling faces, meaning the majority of the volume or the largest volume is coming from the buyers. Though inside here we have some sellers also, but the majority are buyers, and most of the sellers are switching from being sellers to buyers. That's why I put these purple faces here. So inside here, the sellers and the buyers are fighting to take control, but at the end of it all, you'll see that the majority of the faces here are green, meaning that this candle will close as a bullish candle on top. But before it closes, you can see that it goes on top to create this wick here. Now that wick is created when there's three green guys here, the buyers, push the price up, but then they are counteracted by these three sellers right here. And also the buyers who are switching from buying to selling on top are represented by these two purple faces right here. So the candle will come back and close at its close here, because the buyers who took it up are balanced by the sellers who pushed the price back down, being helped by the buyers who changed into sellers here with the purple faces. I hope you guys understood this. If you've not understood that, you can rewind the video and then watch it again. So let's just move forward. This is a representation of the bearish candle. It is the same as a bullish candle, but just switched, because a bearish candle has its high on top and a low at the bottom, just as a bullish candle. But a bearish candle opens at the top and closes at the bottom. So we are going to look at its internal structure. So its internal structure is as you can see here. This candle will open and have some bullish candles inside and some bearish candles, but you can see generally that the majority of the volume is being created by the selling candles, the red candles. So because the majority of the traders inside of this daily red candle are bearish or they are sellers, it means that they will create more selling volume in this candle that will cause it to close at its low here as a bearish candle. So this is the internal representation of that bearish candle. Inside of it, you have the same structure as a bullish candle, but reversed. You see that you have very many red faces as compared to the green ones and the purple ones. It means that most of the volume inside of this candle right here is being created by the sellers. Therefore, the market will go and close at the bottom, creating a bearish candle. But at the wicks of this candle here, we have both buyers and sellers fighting for control. Here you find that the buyers took the price up, but the sellers came back and pushed the price back down, being aided by these purple faces here who changed from buying into selling to push the price back down to that area there at its open. And it's also the same at the bottom. You find that we have three sellers pushing the price down, okay, but then three buyers also step in aided by these purple faces of the sellers who change from selling into buying, and then they push the price to close at its close right there. Guys, if you understand how this is happening here, the price action between these sellers in red and the buyers in green, and also these purple faces here, if you understand how this works, you will be able to trade with clarity. You will be able to understand and spot how these candles form and help yourself and improve on your entries with whatever strategy you are using. So let's move forward, guys. This is a bullish Marabuzu candle. A bullish Marabuzu candle does not have a wick at the bottom and at the top. It has its open and low in the same place, and it has its high and close in the same place. So its internal structure is shown by this line right here, how this line moves from its open at the low up to its high at the close. Okay, so this is how it is represented. Now, when we look at its internal structure, we'll see that it has both bearish and bullish candles, which are representing the buying and selling pressure within this bullish Marabuzu candle. However, when you look at the sellers and buyers here, you see that most of the volume is being created by the bullish candles. You see that there are many bullish candles here. If this is a daily chart, this could be 1 hour candles. Okay, so you can see that there are many bullish candles here with much bigger volume than the bearish candles. So naturally, this market will push and close at its high because there are many buyers, much more than the sellers. So this will create a very, very big bullish candle, which we name a Marabuzu candle. So let's look at how that is represented. So this is represented like this inside. Inside of it, we have very, very many buyers. These buyers do not even allow the sellers to create a wick at the bottom. The buyers are in charge all the way from the time the market opens up to the time the market closes. Inside of this candle within the day, there is some sellers coming in the market, but they are quickly overcome by the buyers and the market continues to go up. Most of these candles form when the day is very bullish and it is supported by maybe fundamentals that push the price even higher and higher. Okay, so this is the internal structure of this kind of candle, and this is the price action that is happening inside of that candle. These purple faces here are sellers changing into buyers and some buyers changing into sellers. So inside of this, you have the majority of the traders being buyers with some few sellers and some few traders changing from buying to selling and from selling to buying. But generally, this is the price action inside of this candle. Now, understanding this can enhance your knowledge. You can be able to position yourself with the right side of the market so that you can also catch these trades and move with the direction of the market. So this is a bearish Marabuzu. It's the opposite of the bullish one, right? When you look at its internal structure, it opens at its high and it closes at its low, okay, with this kind of internal structure movement. Okay, so let's look at its internal structure. You can see its internal structure is like this. This market opens and there's some bullish candles, but the bears or the sellers don't allow the buyers to take or even create a wick at the top. The sellers just continue pushing the price aggressively to the downside. Now, at some point within the day, the buyers can take charge. They can take charge of this and push the price up, but they are quickly overwhelmed again by the sellers who come in with a lot more volume to push the price back down, and then the price closes at its low. So here you see that there is a lot of selling pressure, even if the buyers are trying to come in to push the price in the opposite direction, but the sellers come in with a lot of volume to create this Marabuzu candle which closes at the low. Okay, so let's look at its internal structure or representation. So inside of it, you see the action. There are some buyers who come inside of the market trying to push the market up, but the sellers don't allow the buyers to take control. The sellers keep on coming in and selling the market. And also, some buyers change from their buying buyers into selling buyers, represented by these purple smiling faces right here. And therefore, that fuels the market to go even lower. Generally, a bearish Marabozu candle has so much selling pressure that the buyers are very, very minimal within its internal structure and its price action. Guys, if you're finding value with the video so far, please leave a like on the video, share it, and also subscribe if you're not subscribed yet, guys. This content here, I would not be giving it out for free, but I felt like I really need to give you guys this because it's going to benefit you and make you a better trader. Okay guys, so let's get going. Here we have a spinning top. Now a spinning top is a bullish candle or a bearish candle. It can form both ways. You can see its formation right here. This can form by opening the market, pushing to the downside, and then going up, retesting and going up to create the low and closing at that point right there. This can also form in the opposite direction, but this is the general movement of this kind of candle here. So when we look at its inside structure, it looks something like this. It opens here and it can go down to create this wick over here to create the low, and then it will go up. The buyers will take charge again from here and push the price up, creating this kind of bullish structure. Then the sellers will come in again and try to push the market down. Then the buyers step in again, and then the sellers push the buyers down and close at that close right there, leaving a wick on top. So this wick here on top shows the selling pressure that came in before the market closed, which is this large candle here and these candles here, overcoming the bullish momentum that was pushing to the upside. So let's look at its internal representation. This is how this spinning top looks like on the inside price action between the buyers and the sellers. So the top wick, it has some buyers. As you can see, there are some green faces here. Those buyers push the price up to its high, okay, being fueled by some people who will be selling from the top here, and they will push that price lower and close at that close right there. The bottom wick is just like the top wick. The sellers push the price down, but they are unable to hold the price at its lows. The buyers step in and push the price up again, being aided by the purple faces right here. These purple faces are some sellers who are changing into buyers. So they push the price, which comes back up here, leaving this wick right here. So this is a bearish spinning top. As you can see here, it's just like a bullish one, but in reverse. This is its internal structure. This candle opens here, the bulls take over. This candle opens as bullish first because these candles go up, but then when it reaches its high, the buyers or the sellers start to sell aggressively. They sell aggressively up to the low of this candle right here. And then the buyers come back and try to push the price up, but the sellers are like, no, we will not allow you. So the sellers push the price back down, and then the buyers try to push the price back up, but the price closes at that point there, creating this internal structure of this candle here. Okay, so when we go down and look at its internal formations and the action between buyers and sellers, you see that inside of this body, we have very many sellers compared to the buyers, okay? And on the top wick, it's just like the bullish one. You have buyers going up, pushing the price up first, then sellers come in and push the price back down, aided by some buyers who change into sellers, represented by these purple faces right here, okay? So even at the bottom, it's the same thing, all right? So yeah, let's look at the next one. This one is a hammer. Now, a hammer forms in this kind of shape here. Sometimes the body is smaller than this, but this is its general appearance or shape, okay? So let's look at its internal structure. It forms here, it opens, and then the sellers, you see this very big wick here, the sellers push the market down, okay? They push the market down here, creating this low, but the buyers come back from here and take over this market, pushing the price up again to the high and closing the price there, okay? So this market right here has more volume of buyers than sellers, because to reject this or create this rejection here, there was a lot of buying pressure right here to create this rejection wick at the bottom. This rejection wick is buyers overcoming all the selling pressure that created this wick, and then they push price up and end up closing the price at the high of this candle here. They close the price higher. So this is the internal structure of a hammer. All right, so let's look at its internal formation. Inside of its body, we have very many buyers compared to sellers. Okay, and at the top there is a small wick which is represented by just a buyer and sellers, a few buyers and sellers trying to push the price up and down here. However, this purple face here represents the buyers who turned into sellers to push the price down to create that rejection there. Then down here you can see inside here there are equal buyers and equal sellers. However, at the bottom here of the wick, there are some traders who changed from selling into buying. These ones with the purple faces, they changed into buying, tipping the balance in favor of the buyers. That's why the market goes back up in favor of the buyers. Okay, so this is the internal structure of a hammer candle. Okay, so this is the hanging man. Hanging man is just a bearish version of the hammer. This is how it is formed on the chart. Okay, so let's look at its internal structure. So the market creates these very many bearish candles right here, pushing the market down for most of the day or most of the range of this candle. But this rejection wick is created by a lot of buying pressure that comes into the market, but that buying pressure is not enough to create a bullish candle or to push the close of this candle above its open. So this remains as a bearish candle, but with so much buying pressure created at the bottom to change this bearish momentum that you see with these very many bearish candles into some kind of a bullish reversal. Okay, but the bullish reversal that came in at the bottom here was not enough to change this candle here into a bullish candle, which would be a hammer. Generally, this candle still has buyers or sellers in control, but they are very weak. They've been weakened by the buying pressure that came from down here. Okay, so this is a very, very good candle when it forms at an area of support. This can signify a reversal from bearish to bullish, because you can see the buying pressure here increases to start. The next candle after this would be a bullish candle in most cases. We'll look at that on a chart just in a moment so that you can see how these form on a live chart. Okay, so this is its internal structure. As you can see here, there are more sellers inside of the body of the candle than buyers. But down here, we see that there are equal buyers and sellers in this wick here. But these two purple faces here represent sellers who change into buyers. So most of the sellers here, after the market has reached down here, when they see the buying pressure coming in, some of them cross over and start also buying, increasing the buying pressure, which creates this rejection wick here, and then closing the market right there. So this is the inverted hammer. It's just the opposite of the hammer. Okay, we'll look at its internal structure. This is how it looks like. So this market opens and pushes up, creating this wick here. However, there comes in a lot of selling pressure on top, which pushes the price down and is not able to continue pushing the price down to create this previous kind of candle right here. Okay, to create this kind of candle but inverted. What it does instead is that it pushes the price down, but the buyers step in again and push the price up, and then the sellers push it back down to close at that point right there. Because if this market had closed where the last bullish candle is, we would have seen something like this in the market. This candle would have closed like this if the market closed here at the last bullish candle here. But when the market reached there, it was like this. This is how that candle looked like when this candle was there. Okay, but there are some sellers who came into the market and pushed it back down with those two last red candles you see, and then the market closed at that point. So there was some selling pressure that came in and made the market close at that point right there. So let's look at the price action between the buyers and the sellers inside. So here we see that there are so many bullish guys or buyers than sellers. Okay, and at the bottom we see that there is a purple face, a red face, and a green face, meaning there are some sellers who sold here, but when the market reached its low, some sellers changed into buyers represented by this purple face, and then they pushed the price up to that open. and then the price continued going up. Now here at the top wick, we find that buyers were in charge pushing the price up, but then when the price reached its high, some of the buyers started selling off, represented by these purple faces, aided by the sellers who step in here, and then they sell off the market to push it back down here, as I showed you in the previous candle here, those last two candles. Okay, so this is a shooting star. It's just the same as the previous one, this one here, but in a bearish formation. So this one, its internal structure appears like this. Okay, the market opens here, it tries to go up, then comes down to create this wick here at the low, and then buyers step into the market and buy aggressively to create this wick here at the top. But when the buyers reach this high, the sellers say no, and they come in, step into the market and sell the market aggressively back down. The buyers step back into the market, but they are unable to hold this market up here to make this candle close bullish. The sellers come in and sell the market and close it at the bottom. Let's look at its internal structure. Its internal structure is just similar to the inverted hammer, but with more sellers inside of the body than buyers. All right. Now, this is a bullish doji. A bullish doji is like a spinning top, but with a very small body, very tiny body. This is how its internal structure can look like. Okay, we have the market opening, creating these red candles, pushing down to create the low, and then after creating this low, buyers step in and create a lot of volume for the rest of the day, pushing the price up, and then at the end of the day, the sellers reject this high and push the price back down to close with a very small body, right? So let's look at its internal structure. Its internal structure is like this. We have very few buyers and sellers inside of the body, creating a very small body. A volume is very small for the body, but then the wicks here have more volume than the body, meaning we have equal sellers and buyers creating these wicks, whereas the movement of these wicks or movement of this candle to create this wick is influenced by some buyers stepping into the selling pressure, represented by these purple guys. They change from buying to selling, and then they create this close right here near its open. It's the same here but opposite, okay, at the low. This one is a bearish doji. It's just the opposite of the bullish doji. All right, this is how its internal structure may look like. The market will push up to create this wick, and then when it reaches on top, sellers will come in with a lot of volume to sell off this market up to the bottom, and then some buyers will try to push the market up. Sellers step back in, but the buyers try to push the market up to close at that small body. So this can also be a very good reversal candlestick. This is how its internal structure looks like. It's just the same as a bullish one, but with more sellers in its body than buyers. This one is called a dragonfly doji. Its internal structure is like this. It opens at the high, comes down to create a low, and closes at the same place. Okay, so its internal structure may look like this. We have people selling off, and then buyers rejecting the low price and pushing the price back up close to its open. This is a dragonfly doji. This is how its internal structure looks like. Inside of it, we have so many people changing from buying to selling and from selling to buying. But ultimately, we find that there are more people when it reaches at the low, more people change from selling into buying, meaning that the market reverses from the low and pushes back up to close at its high. This is a tombstone doji. It's just the opposite of the dragonfly doji. Its internal structure looks something like this. We have people buying and pushing the price up, but the sellers step in at its high and sell off the market to come back close to its low. Its internal structure is just the opposite of the dragonfly doji. This one, we have very many people, when the price reaches the high, very many people stop buying from there and they all change into selling. So they aggressively sell off the market back to its low here, creating this tombstone doji. This is the internal price action within these candles that I want you guys to understand. If you understand how this is forming, it will help you to trade the one candlestick strategy better. It will help you to understand candlestick formations better and also chart patterns. And then at the end of the day, you can incorporate this into your trading strategy to find good entries. All right. So the long-legged doji is the last one we're looking at. This one can go either way. It can go in a buying side or in a selling side. That's why I have drawn these two lines. The green one showing the buying formation of the doji, and then the red one showing the selling formation of the doji. Let's look at its internal structure. Its internal structure looks something like this. The black candles represent the selling side of the doji. Okay, the market opens and creates some buyers step in and push the price up to its high, but then the sellers push the price down aggressively and push the price further more aggressively. But the buyers step in at last and push the price back to its open to close it at that same price. Okay, so it's the same with the blue ones. Sometimes it will open and push down, the sellers push the price down, but the buyers step in and buy aggressively to its high, and then the sellers step in and push the price back at the end of this candle's printing range to close at its close. Its internal structure looks something like this for both the selling and the buying versions. All right, we have buyers and sellers switching from buying to selling and from selling to buying. All right, so we have looked at the candlestick science and how these candles create themselves or how they are formed in their internal structure. Now we are going to look at some examples on a live chart so that you can see how these candles affect your trades, especially when they are at areas of value or like areas like support, resistance, demand or supply. How do you apply this? We'll look at that now on the chart. Here on the chart, I'm using this AUD USD chart just to show you guys an illustration of some of the candlesticks. We will not look at all of them, but we'll look at some of them so that you can see how these candlesticks really form and how they affect the market. You can see right here, you can see where this doji appears. This doji appears here, which represents indecision. It represents the indecision between buyers and sellers. This market opens and then pushes up and then pushes down again. There is indecision here, and immediately after indecision, we see that the market reversed and went down. Okay, here we have a tombstone doji. This one, you can see this is a tombstone doji, which represents a very, very big selling pressure. This tombstone doji represents a very huge selling pressure. And you can see that the next candle creates a very large volume. Okay, you can see this one here is an inverted hammer. This one, you can call it an inverted hammer. This one here, you can see after this forms, the next one is a bearish candle, which means this hammer here shows that there is a lot of selling pressure here, which is creating the next bearish candle. You can go on and look at different candlesticks to see how these candlesticks really form and how they affect your trades. You can see this candle here, it's almost a marabuzu candle, bullish marabuzu candle. So when that candle has formed, you know that there is a lot of buying pressure inside of that candle. So naturally, the next candle has to also continue with this candle's momentum to continue bullish. So these candlestick formations can help you to understand what the market may do next. You can also see that this candle here is a very large body candle with a very large volume. This one here. So naturally, you will expect that the next candle also will continue this selling pressure, because inside of this there is a lot of selling volume. Okay, this is almost a bearish marabuzu candle. This one, we have a dragonfly doji, and after this candlestick was created, we see that the market continued to fall. Not all the time that when you see this kind of a candle that the market is going to reverse bullish, because this is a bullish reversal candle, but it has formed within a massive trend. It has formed within a massive downtrend. So you be careful when you see this forming within a massive downtrend. You don't just take the trades blindly, okay? You make sure you only take trades or only take confirmations when this forms around support, okay? Around support or around demand, all right? So here we have an example of demand. This is a demand area right here, okay? That is a demand area right there, okay? So in this demand area, we'll see that there are so many candles that form reversal candle patterns, especially when the market was creating these structures here, okay? And then it created this move here, which took out these highs, and then this area becomes a demand, right? So when this market pulls back down into demand, okay, and gives you this green candle here, which is a spinning top, you know that that is a significant confluence for you to go long. You can see that last candle, this one was a spinning top. That can signify a reversal. And also, it also creates a chart pattern or a candlestick pattern called a morning star formation right here for us to be able to take this trade going up. So you can see when this forms at demand or it forms at supply, you can be able to confirm that as a trade signal for you to enter. You can see that this can be an area of support, right? One touch, second touch, third touch creates this spinning top. You can enter your trade after the next candle has closed, okay, above the spinning top. Then you can be able to trade like that, right? You can trade like this, and then you can take your profit as you go, right? So that is one example that you have seen right there. Also here, we can see that this is an area of supply, okay? This was a supply right here. That's a supply zone. Now you can see that when price came down from there, it went back up to supply and gave us this big body candle here, okay? That large body candle right there, okay, this one, which also engulfs this previous candle. This large body candle shows the momentum shifting from bullish to bearish here, okay, rejecting off of the supply. So this candle here is a large body candle, which we also looked at in the candlestick course right there, okay? So this can signify a shift of momentum from bullish to bearish. So when that candle closes, you can take a trade here, stop loss above supply, and then you can target a 1 to 2. So these candles can help you understand the movement of the market, can really help you understand. You can also see just here that we had an area right here, okay? We had an area here. The first week here was the first rejection. Market went up. Second rejection, there was also this retest. Now you can see this hammer appearing at that level of support, this hammer here, okay? Hope you guys can see that there's a hammer here. After that hammer closes, the next candle here, you can take a buy trade there, okay? And then you can put your stop loss below here, and then you take profit above. So those candlesticks, guys, they work if they appear at support or resistance or supply or demand zones, okay, or at a Fibonacci level. Anywhere you can be able to trade those candlesticks. You can even see here we have a level right here, okay? We have a level there, and you can see that there was a touch here, first touch, we had a second touch right here, okay? And then when the market came back here, you can see it created a spinning top, which is bearish. And then after that, there was a big bullish body candle that closed this one. So after that candle closes, you could take your trade there and your stop loss just below that level right there. And then you could target a 1 to 2, which you could get right there, okay? So this is how you can use these candlesticks and this candlestick knowledge to be able to trade in the market. This video has been long, guys, but I hope you guys have really been here with me and you have gotten value from this video. If you find this video valuable, please leave a like on this video, share it with someone who really needs this knowledge, and also subscribe to the channel, guys. Thank you guys for sticking around till the end of the video. Until next time, peace and out.